Welcome back to Volatility 411. I'm Kevin Davitt, part of the Options Institute, and this is Tuesday, January 19th. Back at it after a long holiday weekend. Now, the S&P 500 popped back above 3,800 on the open today, higher by more than 0.5%. The VIX index is backing off this morning and measuring right around 23 again, after briefly pushing near 26 during Friday's session. The January VIX futures and options will expire and cash settle tomorrow morning. The Jan futures are trading at 23 as I sit here. Feb VIX futures are about 250 over spot and trading 25.50. The spread between Feb and March, which will become the month 1-2 spread tomorrow, is at about 80 cents. Tomorrow also marks the end of the Trump administration with the inauguration scheduled for noon Eastern. Former Fed Chair Janet Yellen is in front of Congress today in her quest to become the next Secretary of the Treasury. Earnings will shift into another gear this week, with Thursday and Friday being particularly active. Big names like Netflix, Goldman, Halliburton, JB Hunt, and Logitech all scheduled to report this week. Now, shifting to VIX options, it looks like the Feb 25-30 call spread traded a few thousand times this morning for $1.17. Some upside March calls are trading actively as well. For example, the March 85 calls have traded about 12,000 times today, mostly a plain 35 cents. Now, for whatever it's worth, March VIX will expire on the 17th of that month, St. Patrick's Day. That also happens to be 1 year after the VIX index measured nearly 85 intraday. Now, hopefully there's no repeats of last March's massive volatility in 2021. But if there is, understanding the VIX index as well as the tradable VIX futures and options could potentially help market participants offset some of their exposure to macro volatility. All right, that's Volatility 411 for Tuesday, January 19th. Thank you very much for tuning in.